Our investment committee meetings are global, especially now with these, 4 different time zones, because we recently added India. Somebody's going to have a bad time, at least from a time zone for the calls that we have globally. But it's important that we share information with each other. We understand what's going on in other markets. It can provide insights into another market. So like somebody who started it, we are just 2 of us, and now we have these people all over the place. It's great. It's amazing to see. And it's amazing not only just for my own kind of personal ambition to see us grow, but just the support that we've gotten from the organization to continue to add different geographies and having, support from the teams in all these different regions as well.
Hey friends, welcome to Smart Venture Podcast, the best information for future CEOs. Starting a company is easy, but growing and managing it is hard. In this podcast, we sit down with the best founders, experienced leaders, and investors in tech and relevant space to give you the best tips to grow your company and grow yourself. Some of our most popular episodes are about crypto founders and investors. Check out our new podcast called Keeping Up with Crypto on YouTube, iTunes, and Spotify. If you like it, don't forget to subscribe and give it a 5-star. Hi, Brandon. Thank you so much for coming to the show today.
No, thanks for having me.
To give the audience a little bit TLDR, you started your career in Accenture after your internship, and then you've worked on various BD jobs, some of the company that I'm sure everybody heard of, for example, Credit Karma, as well as just many other roles until you started the Loan Guy. And then now you are running Pernod Ricard's fund in basically investing in all things related to like togetherness in consumer tech sector. So to start the show, I would love for you to tell us more about like how you started and how you got to where you are.
So for me, I think career-wise kind of goes back to almost my college experience or my time growing up. So I grew up in West Virginia, and I was a first-generation college graduate. So I chose to go to school at the local school at West Virginia University. And at the time when I went to college, I didn't have much of a sense of career paths at all. My dad ran a small business as an electrician growing up. And just the fact of going to college was kind of an initial feat. And then I think career-wise for me, I had an advisor, a guy named Dr. Bird, when I was at West Virginia University, who really kind of opened my eyes more broadly to here are things I can do with my career. For example, I learned what management consulting was and thought that was really interesting, and the ability to learn a lot, work across a bunch of different companies and industries, to travel. As a kid, I didn't do much traveling. So I ended up working in management consulting for the first 4 years out of college to New York, which was a big step for me at the time. Learned a lot. I think it's kind of your typical management consulting type of job, worked across a bunch of different clients. Ended up working a lot in kind of the food and beverage industry within CPG, including actually with Pernod Ricard as a client, where I'm at today, even though I couldn't have, forecasted kind of, what the future held at that time. But did that, but then always had more of an interest around, I studied engineering in school, so more of an interest around technology and startups and entrepreneurship. So went to business school at UC Berkeley, moved to the West Coast in 2010. And, right when I got here, focused on kind of building a network in this ecosystem. So I was head of the Entrepreneurs Association at school. I worked at Foundation Capital when I was in business school, and built that network through my classmates, through just cold reaching out to the startups. I worked at Evernote when they were a small company at the time during my internship, and then graduated and thought, okay, I always thought venture. I learned more about venture, to be honest, when I was in business school. I thought this is really interesting. I see parallels to management consulting, except working with early stage startups. So it seemed kind of like the best of both worlds, learning a lot, variety of work. However, I felt like I needed some operating experience first to be a good investor. So I joined a company called Datalogics after business school. It was a very kind of fast ride when I was there. We were basically early partners for Facebook when Facebook was actually trying to prove that ads worked on Facebook, which seems like a whole different world at this point in time. But so it was a company that connected online ads to in-store sales, built the partnership with Facebook, built with Twitter, Google, and some of these other companies. Datalogics was then bought by Oracle for over $1 billion at the time when $1 billion exits were kind of unique. And then, moved around startups, worked at Credit Karma for a bit, helped build out a new business channel for them, more specifically focused on student loans and small business loans. Joined them when they had just raised, I think, at around $1 billion valuation, and then ultimately they were bought by Intuit later on for more than that. So that was really good. I think an experience focused more on kind of consumer tech, but more from a financial fintech point of view. Saw the massive gap around student loans. And this is as you relate to kind of my entrepreneurial endeavor. I left Credit Karma to start my own company called Student Loans Guy that was focused more specifically on helping people figure out what to do with their student debt. So whether that was people were paying, I noticed even when I went to business school, the even federal interest rate for student loans was around 7%, which is much higher than mortgage rates or a lot of other categories. So I noticed that people who either had really great financial profiles could refinance in companies like a SoFi or others at 3% and save a lot of money, or there were people on the other side who had these big onerous student loan payments that didn't know that there was federal government assistance programs if they worked in public sector or other things like that, where they could actually significantly save on monthly payments. Created a product, pushed at selling it into universities and alumni associations. What I found is I got kind of burnt out. I was doing this primarily as a solo entrepreneur. It was a great lesson for me, I think, as an investor. I think you need to be super dedicated into what you're building. I think you need to have a co-founder. I think it's a bit lonely. I think you're doing a lot of the stuff on your own. And ultimately, I got to the job I'm at today, kind of a long-winding story of where connection of I was starting to kind of explore opportunities. There was a guy named Paul Holland, who was a partner at Foundation Capital, who I knew from my days working with him when I was at Berkeley, who was basically advising Pernod on how to create a venture fund, saw that they were going to be creating it and starting here in San Francisco. And, I knew Pernod from my experience before doing management consulting. The alcohol industry is a pretty, fun and interesting space to work in. And then the thesis itself was very unique. So it wasn't just investing in alcohol brands, but much broader than that. So ultimately that got me to where I am today. And I'm sure we'll talk, more details about, what I do day to day, but that's basically kind of the story of how I got to where I am today and, influence that I had. I think that came specifically, I would say, really from an advisor I had in undergrad who, opened my eyes to the world. And then I kind of figured out a path from there.
Yeah, totally. I feel like in the past, I know the later part of the story, but I didn't really know how you kind of grew up and, got to college, went to Berkeley and stuff. I'm curious, since you mentioned you're the first gen college grad, what drives you inside? Where does the ambition come from?
I mean, I don't know. I think I've just always wanted to succeed, I guess. I think that, I've always felt that, I could do anything. I don't know, maybe it's the American dream, that I bought into in some way, but anybody can accomplish anything. And so even if, I was a first generation, college grad, or I grew up in West Virginia or whatever, I think a turning point was when I, moved to New York and worked in management consulting, and all of my peers were, Ivy League grads or things like that. I used to be maybe intimidated because, I didn't come from the same background. But, when I started working with these people day to day, I noticed there was no difference between their skill set or my skill set. And, it was just maybe the only thing I was a little bit behind on is, having a network already. And, that's something that you can build, as time goes by. And, I've done that. And I think even when it was a driver to go to business school in some ways, I felt like something that I saw other people had from undergrad, maybe that I didn't have as much. And then, yeah, I mean, just my own personal drive, just to succeed, work on interesting stuff, live a comfortable life and, or an exciting life, continue to learn. And I think in the industry I'm in, that's kind of ideal for that.
Who do you consider as your personal board of advisors when you were figuring out your journey?
Yeah, so I mean, I'd say early on, the person I mentioned before, Dr. Jack Bird, but then I'd say, over time it's evolved. In my day-to-day life now, my boss, a guy named Stefan Lange, he's been a great mentor to me over my time in this role. Paul Holland, as I mentioned before, even Alex Ricard, who's the CEO of Pernod Ricard, I think supportive of what we're doing kind of day to day. The other thing, I think my classmates, even from business school, I'm still close with, some of which are founders, touching base with them, getting career advice, but that goes both ways between myself and them to me. And then of course I'd say my wife, who I think is guides me a lot on personal and career decisions.
Totally. What do you consider as one skill that you're constantly trying to get better at?
I think one skill is probably more around just continuously connecting with others. I think in a VC job, there's time management is always a very tough thing. So there's always too many things to do. So figuring out around kind of focus and prioritization. Sometimes I'm very, focused, let's say, on a specific deal where I'm not taking enough time to talk with my team and just say, how are you doing today? Or, how was your weekend or things like that. So like there's kind of general kind of soft skills around management. And the other is like building a network overall is super important in a job as an investor, and being almost maybe more intentional about it. I think, there's times where people reach out to me. I'm always happy to help, open up my network, play matchmaker, I think, where I can. But like, I probably am not intentionally doing that as much as I should be or could be. And so I think it's just finding time to prioritize and focus on that. And, I think building out soft skills as more and more.
When it comes to building up your current fund, you mentioned that your mentor kind of told you about this opportunity. What do you do actively to, I don't know if you pursued the job or the job pursued you, or it was some sort of like synergy there. What did you do to get started with the fund? And then what do you see as the unfair advantage of your fund that Pernod Ricard can offer that most other people cannot?
Yeah. So, the fund has been really fast evolution. So when we started, it was, myself, one other person, and no investments, and just figuring out what to do. I've probably played every role in the fund, from analyst, associate, BD person, CFO, every aspect. So I kind of understand what it creates to start a fund from scratch. I understand kind of all the different processes of, being within a venture team. And a lot of it was learned as you go. I mean, we had, I had friends obviously that had worked around venture and stuff like that. So you ask for connections, but learning what level of diligence to do, what are the best sources for deal flow. Even earlier on, it was like I would take every single email or connection I could get to find opportunities for companies, or just to tell people who we are and what we do, because nobody had heard of us. And we're still not necessarily super well known, but like, now it's much more, okay, I get a lot of inbound, and I have to, before I would say, I always will reply to everything inbound. And now it's just, I just don't realistically have time to do that. If it's targeted and, if it's relevant, then of course I still will. So I think I've learned quite a lot, I think, on, just building out a venture fund, a corporate venture fund in particular. And then what makes us unique, I think, was your second question. And I think, this is the reason I joined here, is because it's not just that we're backed by, Pernod Ricard, which is a large alcohol company, with amazing brands, I think, globally, but also the thesis was not investing in the core business. The thesis was completely new. It was completely different. It was basically anything outside of alcohol, more with this concept of conviviality, which is, this concept of bringing people together, sharing experience. And it seemed like, to me, this was just an untapped opportunity. Like, everybody's looking for fun. Everybody's looking to make personal connections. And Pernod Ricard, even as a company, our brands enable this. I mean, a lot of the brands, it's not just when you're out and you're having a cocktail, but like, these brands put on amazing experiences, even in themselves, around how they do their marketing around, music festivals or whatever else. It just seemed like there was an opportunity to, have something that unique that I think could help us win deals, and to build out basically, we joke, and sometimes people call us a fund of fun, but essentially creating investment group around entertainment, experience, things like that. And so that was really attractive to me, and continues to, make my job exciting day to day.
You mentioned that when you first started the fund, you were kind of like the everything person. You were the CFO, you were the BD person, you were the investment person from O level. I was wondering, how do you structure your day? And one part is kind of already done, like you guys already have a fund, or like have a company that can back you. Tapping into the company's resources is also like a part of your job, I assume. When it comes to like starting a fund, how do you like structure your day? And then like, how do you kind of like set up benchmark for yourself to identify what exactly are the core tasks to be accomplished? And you mentioned there was another person, like how do you guys kind of like separate the work between you two?
Yeah, and I mean, now we have a bigger team than just two now. I mean, every day is a bit different. Of course, like, sourcing is a big part of my job. It's, meeting entrepreneurs, meeting other investors, finding relevant deal flow. It could be, listening to podcasts, could be reading, news articles, so discovering of companies and then getting connected to those companies is arguably the most important part of my job. Then there's diligence. So kind of, let's say, the two main job parts of any VC is finding good companies, and then doing the work to convince myself and our investment committee that this is a company that we should invest in, building financial model, talking to customers, things like that. So that's more, let's say, the investor side of the role, and just before investment. And then of course there's after investment, my job was, I look back, kind of easy early on because we had no portfolio companies. So I could actually just do that part of the job.
Mhm.
And then now we have globally almost 40 portfolio companies. So there's post-investment, managing the portfolio. Sometimes we're on the board or we have board observer seats. A lot of times we don't, but like even when we don't, staying in touch regularly with the founders, being as helpful as you can. And whether that's more generically, hey, I have a friend who works at another tech company who could be a partner, to one of the reasons they like taking our money is because, Pernod Ricard is behind us. And so are there connections to our brands where it makes sense? Do I make introductions to our CMO or to somebody else who leads a brand or our e-commerce team or whatever kind of makes sense depending on the company? So we try to open doors where we can inside of Pernod Ricard. Part of my job is definitely building relationships, not only with startups and investors, but also inside of Pernod Ricard, either in the US or in Paris. Any given day might have more emphasis on one of those versus the other. But in general, I kind of combine that. And then, the other piece that, I mentioned is like, we still have a relatively lean team, even though we've added to the investment team, but like even managing things like portfolio reporting and financials and all of that is still, kind of significant work. And we've invested in some other funds. So just administrative stuff like getting capital calls and, having all of that kind of stuff going. And, as we've grown, we're trying to add. So I'm not necessarily doing every component of that anymore, but it's a balance of all of that.
Yeah, totally. So like I think one of the things I found really interesting about the fund is you guys don't invest in, at least not majorly invest in alcohol related brands, basically Gen Z version of XYZ kind of drinks, but you guys are focusing on four main area, which is like real life social network, redefining retail, distance togetherness, and home entertainment. How do you guys come up with these themes? And I know that they're all share like one common character, which is like, where people could be enjoying a beverage while doing all these like future entertainment or togetherness activities. I'm curious, when it comes to evaluating the investment return benchmark, like what are some returns that your firm is looking for? Are those like monetary returns, or are those more like how can we distribute our product into more of people's life later on?
Yeah, so I mean, we were created less to be initially kind of very strategic,
Mhm.
let's say in the short term to our brands. It was more about discovering the future. So in the future, could Pernod diversify its business in some way beyond alcohol? So this is kind of why we were created to start. And it's still
Mhm.
the kind of core of what we do on a day-to-day basis. So it's discovering complementary businesses, or in some circumstances, substitute businesses to what the core business is doing. We've grown our thesis over time. We're doing some B2B stuff where maybe it is a bit focused more on how do we help the core business in the short term around partnership, or that could be, marketing tech or something else. And then, the substitute side we added more later on, which could be like consumer products, non-alc, liquid death would be a good example. It's one of our bigger CPG related investments. But day to day, we're looking more, is there diversification around consumer experience, consumer entertainment? It's very complementary to what the core business does in some way. This idea of like, personal connections is basically, a core human need, and there's opportunity there. So, as we think about KPIs, for us, there's one is of course financial returns. We have a certain profile that we want to see in every company we invest in to justify making the investment. And that can vary a bit. We're multi-stage, so seed. We want to see something that could be very big down the road, knowing that it's higher risk. We're focusing more on a team or expanding into a new market or something. Or later stage, it might be less of a multiple of a return, but something that could be ultimately a bit more strategic in the shorter term, or a company that has opportunity for clear market expansion or whatever. So it kind of depends. The strategic element, I think, remains important, but it could be either partnership or it could be just insights. What do we learn about a new category that we could share with broader Pernod Ricard team? Or it just depends. I think as long as the way we look at it, it's a bit harder to measure the strategic aspect. As long as we're continuing to generate positive financial returns, the strategic stuff will come, and then nobody's going to question what we're doing because we're making the company money.
Yeah, totally. When it comes to four different areas of like portfolios, in terms of like running the fund, do you split X amount of money into each category? Or is this more like, oh, when we see a good deal, we'll just invest in it? What is like the thinking philosophy behind running a successful fund versus helping the brand to make some really strategic investment that may generate long-term value for the company?
We don't necessarily have like an allocation per thesis. In somewhat we do, but like, for example, we've done some stuff in like beverage, and we specifically don't want the fund to be a bunch of beverage investments. We found some really opportunistic great brands, and we've made those investments. But I'd say if, for example, let's compare theses that we have, one called real life social network and another around home entertainment. We've invested more heavy into this concept of real life social network because we've just seen much more opportunities around this that we think have good financial upside. Home entertainment is clearly an interesting topic, especially in a post-COVID world. However, we haven't seen as many kind of venture scale businesses come out there. So we haven't made as many investments in particular around the space. It's just for us, it's finding what we feel like are just companies that are disrupting, something interesting within the space. So like, AvantStay is one of our portfolio companies building a new hospitality brand. There was a gap around group travel, a consistent brand experience. And so like the idea is like they could build what could in the future be basically a new version of a Marriott. Or like we're in Fever, which is like building, brands around in-person experiences and entertainment. They've partnered with Netflix around their IP and creating in-person experiences. Like they could be a new Live Nation in some way. So I think like we see these trends or either like maybe industries are still led by kind of older players where there's demand, and we don't necessarily focus this fits specifically in this thesis or not. In general, this is in our thesis around shared experience, around conviviality, and we think it's a big opportunity. We think it's a good team, et cetera. Then we'll make an investment. Like we've done on-demand delivery. We're in Zola around wedding planning. So it's interesting. When I first joined, actually, I was a little bit concerned that our thesis would be too narrow, that we wouldn't find enough interesting companies to invest in. But like, as you start to kind of dig down into all these different opportunities and areas, there's actually still quite a lot. And I think even with 40 portfolio companies now, I think we have plenty of space to keep growing.
Yeah, for sure. I think like when I was looking at these experience related business, I feel like one of the questions is how can you scale? We're not talking about like the primarily depend on tech platform. I assume like, I don't really know about AvantStay's like primary business model is based on like business development or something, because I feel like in terms of like the more life-changing scale of tech business, you have to ride a really huge wave. That wave typically are like technology related wave. I'm just curious, when you guys are investing in these companies that are maybe like really heavy on human or like, one-to-one relationship, what's your thought process on how can this company scale or like grow faster?
Yeah, so I mean, I think everything we look at, it's still, I would say we invest in consumer tech. So everything has a technology component to it. Even a company like AvantStay, which maybe on the surface seems like a hospitality brand, on the back end, there's a lot of technology behind it. They've built their own PMS. They have their own software on managing different kind of the host for the homes. They build out concierge within the app. If you can order and have your fridge stocked before you arrive at the house. They have, as far as like getting supply of homes, they have their own software around identifying the right types of homes. They have figuring out in which markets what regulatory issues may or may not exist as they want to enter into a new market. All of that is tech and software driven in the back end. So there is actually a lot of technology behind it. Or even like Fever, it's like, okay, you're going to an in-person experience, but like they built that business using tons of data around what type of experiences do people like to go to. And then they've since created their own experiences utilizing a bunch of data around that. And they have a whole media engine that supports it that is very tech driven. So I think there actually is a lot of technology behind a lot of what we're doing. It's just to the consumer. I mean, this is actually what we look for. To the consumer, you don't even really know. You just know, hey, this is a seamless, easy experience for me to go out and have fun, because the technology has actually made it that way. So the consumers can have really good experiences. And one of the things we look at for almost all of our companies is like, what is their NPS score? That means they're actually satisfying the consumers. And a lot of, at least our big winners, we see NPSs around like in the 80s, which is, kind of unheard of.
Yeah, totally. When you guys are investing in these big categories, is there something that you've seen that most people probably don't know? What are some insights that you kind of discovered throughout the years investing in these categories?
I think, for us, it's changed in any given market. So I think we stick to our themes around shared experience. I think people want that, whether that even in the COVID world, people, it was like, okay, instead of it being in person, how are people hanging out virtually? And so, we looked a lot at a lot of these companies. You always have to pay attention to macro trends. I mean, even now we're starting to see as everybody's starting to come back in person, how many of those companies that boomed during COVID are continuing to boom now, or is this kind of reversion to the mean as people talk about happening? I think the core of our thesis has not really changed, actually, even in 5 years. Yes, we look at more virtual experiences because things were already moving that way even before COVID. So I mean, we have an investment in a company called Wave, which does live virtual concerts. We made that investment pre-COVID because we saw kind of the growth of the gaming world and how people were hanging out virtually more so anyways. So like that's also very interesting. However people want to hang out and spend time together and have their entertainment. Company that obviously did well around COVID and buzzwords of the metaverse or whatever else at this point, they're definitely on top of that. So we definitely look more at that than maybe we would have years ago, but still trying to figure out from like a macro point of view, what will those businesses look like in a year or 2 years from now, or will people go back to wanting to spend time with each other in person, which they definitely will, but what is the mix of that?
For sure. When it comes to like, the innovations in this space, like what are something that you feel like it's really interesting?
Innovations around shared
Um,
experience or
yeah, around
around.
shared experience or like the togetherness. Basically, like what are some companies that you kind of feel like are really changing the game of like how people function traditionally in a certain area?
I mean, of course, I can tick off some of the other companies I've mentioned. I can think of maybe a company that we've invested in recently, an early stage one called Atmosphy. It's kind of interesting. It's basically positioning as like Yelp meets TikTok. So clearly, we're seeing trends of people consume more video overall, and Yelp. Although I still use Yelp pretty regularly, its UI is pretty outdated. You're going there, you're reading reviews where people are looking for something much more visual or interactive, and they focused on dining and nightlife as a starting point. So I think like that's something where we saw the trend of video. We think people are still looking to discover interesting and fun things to do. So that's one that we made a bet on at the seed stage that it seems to be scaling pretty well still. So we're seeing kind of what are overarching behaviors and how does that change how people interact with each other. So I mean, yes, there will be evolutions on more specifically what we look at, but like it doesn't change our overarching kind of main theme.
Yeah, totally. When you are looking at, for example, like the Yelp meets TikTok company, because I assume you guys invest in all different stages, especially the earlier stages ones, it's really hard to tell what is going on. I think most founders already have a good background when to basically have really extensive startup related experience or they look great on resume. But I'm curious, like, how do you identify who is going to make it in the space when it comes to earlier investments?
Yeah, I think for early stage, the level and type of diligence is definitely different from later stage. So, I mean, we're focused more on the team, the idea, the ability to create a market. I think you try to get a sense of, why are they starting this company? Is this like a passion point for them? Are they going to be in this for 5 to 10 years, or are they going to give up on it? I think that's really important. Do they have a personal story of why they're creating this company? Especially in early stage, I think this is maybe something more unique to me, but like I hate seeing, these decks that show here's a giant market size. To me, what the most interesting companies are like that are going to create a new market, then capture that market and be the leader in this new market instead of saying here's a big market and I could take 1% of that. Do I feel like this idea is unique, solving a big pain point and can create a market for itself? I think on the seed stage, and of course the team is the most important thing at the early stage. I think you go later stage, you have lots of data. You can more, look at numbers, look at trends. Of course, the team is still more important, but it becomes a different way of looking at companies between earlier and later.
Totally. When you're trying to build a balanced portfolio in your current fund, like how do you kind of like intentionally do so? Do you invest in, let's say, like AvantStay? It's like basically similar to an Airbnb business model, or like you guys also invest in like Common and like, some other companies. I'm curious, how do you pick the winners or like in a particular space, or like do you guys just invest in similar models, but in the similar space, whoever win, you guys will get the benefit of it?
I mean, we try not to invest in competitors. I think we choose different areas. And if we feel like we're a bit overweight in a certain, for example, we've actually done a lot of like prop tech, not by design, not because we're trying to do prop tech, just because we've seen a lot of interesting opportunities around, shared experience within, prop tech. So we've made a good amount of investments there, and we feel like, okay, we have like a lot here, or even beverage. We don't want to be too overweighted in any certain sector because we're trying to have a diversified portfolio. So I think that's one way we think about it, or even like, we love to follow on our winners and continue to put in bigger checks in future rounds. And then we start to look at our portfolio and say, are we too heavy in any one or two specific companies? Maybe let's even out kind of our, the distribution if something happens. So yeah, I mean, we are looking at kind of portfolio, how it's built and diversification of it, but we're not trying to invest in competitors. I think, if we choose a player in a certain space, we stick with them and support them. There's opportunities in the future where companies that aren't competitors now could be down the road. If that's the case, then, of course, we don't want to exchange any sort of information between either company. We haven't really seen, I mean, a little bit probably of that, but it hasn't been an issue, I would say, and kind of what we do day to day. And then like otherwise, like, yeah, there's certain models, maybe like, marketplace as an example, that we like and we know decently well. So like we've invested in, Peer Space or Outdoorsy or Zola, who are all marketplace businesses, but serving different kind of versions or different models of that. So it depends on, we definitely have themes and we definitely get into certain areas, but we try not to be too overweight in any specific one.
Totally. Right now, because Web3 is such a trending topic, since you guys invest in a lot of consumer tech company, what do you see as like the future of consumer tech, and how can brands leverage like Web3 to build a solution towards brand loyalty or like any type of customer growth through Web3 technology?
Yeah, so I think Web3 for us, I mean, we definitely I've spent a lot of the last year in particular kind of diving into this space, finding opportunities for our brands. I think we view this space as a bit more as a B2B opportunity for Pernod Ricard. I think there are definitely use cases specifically to NFTs. I think two areas that I think are interesting. One is something that's around connecting both physical and digital, and this can be seen more in like, let's say, the kind of collectibles area, even for Pernod Ricard. So Pernod Ricard owns a lot of high-end spirits, high-end whiskey brands, things like that, which are already sold for, it through auction houses or for thousands of dollars that people collect. Sometimes they don't even drink them. They're essentially a financial asset. And so this is the perfect thing that could be associated with an NFT. You could validate the product through blockchain. You could enable secondary sales in an easier way. So that's something that, we're actively kind of looking at different companies that can, facilitate that I think is really interesting. Mm-hmm. The other use case I think is around kind of the idea of membership or loyalty using NFTs. So, or even like think about it almost like a future CRM. So I think, all the data that can sit on a blockchain, I think can enable through ownership of NFTs, different ways of brands, celebrities, whoever, to engage more with their fan group or their customers or however you want to call it. So I think that's another use case that I think is very interesting that, we've looked at. And even I think that even on kind of related to that is I think ticketing in general too. Mm-hmm. So ticketing for events, experiences, again, I think things that can kind of counteract counterfeiting or enable, certain experiences by owning an NFT. You get, airdropped a ticket for an event or something like that, I think is definitely interesting. And, I mean, we've made one investment in this space so far, a company called Unblocked, which is kind of a marketplace for NFTs, initially focused more on the music industry. And then we're continuing to look actively, even right now, at the space more around the use cases that I just mentioned.
Totally. When you mentioned about Unblock, it's like a music NFT related marketplace. And how would Pernod Ricard, I guess, like, I wouldn't say plug their product into it, or like, how do you feel like the company's resources can like help this startup succeed, or like vice versa? How does your portfolio companies interact with the mother company in general?
I think in general, it could be a variety of things. So again, I think the later stage, the better for partnership typically, but it could be, of course, we as a company, we know how to build brands. We're investing in consumer companies, all of which ultimately want to build brands. So how do we help them do that? How do we help them, learn from things that we see or that our brands see and do every day? Another one is Pernod Ricard is a global company. So we operate in 85 countries. I focus on primarily US companies, but US companies, a lot of times as they grow, want want to go international. So it's definitely, we can open doors, through a variety of other markets as we do that. Even our investment team, we invest now across China, India, and Europe. The other thing I think is, pretty interesting and unique now as we've developed our portfolio. We have a like-minded portfolio. We connect our portfolio companies to each other all the time. I think that's another valuable angle as we've just built, a group of companies now where we can provide value. But to Pernod Ricard more specifically, it's as needed. We're not like a CVC that's like set up for pre-M&A or something like that. We're just trying to basically provide insights and a unique partnership into, channels, marketing, whatever it may be. And my job really coming from more the startup world is I view myself more of an advocate for the startup in trying to, find their way into navigating the Pernod Ricard organization.
Totally. Since you guys are working closely with the mother company, like how is the investment decision being made? Do you guys have complete control over the America investments? Does the corporate have to approve everything that in the venture arm kind of like looked at?
Yes, I mean, formally, the way it's set up, we operate pretty independently as a venture team. However, we do have an investment committee that includes our top executives at the company, including Alex Ricard, our CEO. And so we do have regular meetings with them. They give formal approval of what we do. But, day to day, we're doing everything. Those meetings are much more just to kind of keep them, aware and interested in what we're doing day to day.
I'm curious, like, since you kind of grew this company or like this fund from scratch when it was you with the other person, and then now you guys have a few different teams in like different places in the world. What does that look like for you as like one of the, I guess like co-founding team in the firm, and then like how did it grew for you personally from your personal opinion, as well as like from a company perspective, like how do you guys function with these other global team members?
Every region runs pretty independently day to day. My network is primarily in the US, and I can focus on the US market and in the startups, et cetera. I have a colleague in China who will do the same as it relates to China. So each group runs on, kind of on its own, because every market has its unique, differences or, connections personally within networks or whatever. However, we do have global calls as a team. Our investment committee meetings are global, especially now with these, 4 different time zones, because we recently added India. Somebody's going to have a bad time, at least from a time zone for the calls that we have globally. But it's important that we share information with each other. We understand what's going on in other markets. It can provide insights into another market. So like somebody who started it, we are just 2 of us, and now we have these people all over the place. It's great. It's, it's amazing to see. And it's amazing not only just for my own kind of personal ambition to see us grow, but just the support that we've gotten from the organization to continue to add different geographies and having support from the teams in all these different regions as well.
Totally. When it comes to learning from different part of the world, have you see some patterns that in the other side of the world you feel like America should be paying attention of?
We've tried to look at here in the US, and we just haven't found it yet. That we kind of maybe came from China more specifically, is like this idea of live stream shopping or group buying is very big, specifically in China and in some other markets. There's definitely companies that have raised money in the US around this. We've looked at this space. I still feel like, I don't know if it's just the dynamics of how people behave differently in the US versus China. I still think the idea of social commerce is very interesting. I'm just not sure how much live is versus kind of social, because people are busy all the time. Maybe they're not always have the opportunity to look at something live and kind of make decisions off of that. That's one that I think, we try to take learnings and then look for opportunities in other markets, but, it doesn't mean we necessarily have to do something from it. That's one example at least comes to mind.
My last like real question is, what does your content diet look like right now? What kind of inspires you in terms of like investing? What are some content that you constantly consuming to help you understand the market better?
I do listen to podcasts a good amount. Listen to kind of the Jason Calacanis ones around, This Week in Startups or All In. I think Pivot is pretty good. The, Kara Swisher, Scott Galloway one. I think there's some other ones that are more general. I think they're just kind of interesting, like Business Wars is an interesting one. So that's on kind of on the business side on listening to stuff. Then reading, I think the information is really good as it relates to kind of tech and startups. I think Bloomberg is good for general overall kind of market things as it relates. There's still a lot around kind of tech and consumer behavior and things like that. Yeah, and of course, I think like every investor, I probably have a million newsletters over email, and when when I have time, I try to read, what I can, but I don't have as much time to read as I used to, I would say. And that's why I listen to things a lot of the time. But yeah, I say that's kind of some of what I consume, at least for kind of news.
Totally. So we have 1 minute little fire round for you at the end. So number one is like, what's your favorite book?
So favorite book, probably Billion Dollar Coach. It's a book about Bill Campbell, coached a variety of different Silicon Valley execs. I think it's very inspirational in some ways, kind of the relationships that he was able to build, the influence he was able to have, something, I would love to aspire to, I think, one day. Another one, I think more around kind of personal development I'm reading now, and kind of, as it relates to even like managing a team more broadly, very popular one, but Stephen Covey's, 7 Habits of Effective People. So I think that one just is a reminder of like, how do you better prioritize what you do day to day and kind of focus on the most important things.
Who makes the biggest impact in your career?
Biggest impact, like I said, it's probably, the undergrad professor / advisor I had, Dr. Bird, who's really, I think, changed the trajectory of my career more than anyone else. So I would give it to him.
Who would you invite to your dinner party?
For a dinner party, I think I would probably do Barack Obama. I think he's had probably one of the obviously most interesting life experiences of, anybody who's living, and I could tell, I'm sure, a million amazing stories.
Where can we find you outside of work?
Outside of work, these days, it's primarily helping to raise my 2 young children, where I spend most of my time. So maybe around, the parks of San Francisco, or, whatever activity it is that, that my kids want to do. If I have free time beyond that, which is not so much these days, I like sports, basketball. I used to play. Now it's more so I'm a Warriors fan. So it was, good to see their performance this year. And then, hanging out with friends where I can, as well. But I think, having kids, it becomes like, friends that have kids type of thing as well. But yeah.
Totally. Thank you so much, Brandon, for coming on the show today.
Yeah, thank you so much. This is a lot of fun.
Thank you for listening to this week's episode. If you enjoyed today's episode, please hit the subscribe button so you don't miss out. Have a wonderful day.